All right. Welcome. It's Thursday evening, 7 p.m. Eastern. Welcome to our real estate accredited virtual meetup call, where we intend to share our knowledge of real estate in general, more particularly in-place multifamily value add mostly. So usually I am with at least Jeff, sometimes Chris, my co-hosts and partners at Boost Capital Group. But this evening, actually, I'm just by myself. They are busy running the business. Welcome again. We at Boost Capital Group, we help people invest passively in real estate. So far, we've helped people invest in a total of 4,000 units. To date, we've achieved 2x returns on full cycle deals. And we're running this virtual event every Thursday at 7 p.m. As I mentioned, we start. So topic of today is unlock your wealth in 2024, how to underwrite multifamily real estate like a pro. Little bit of a disclosure. We do not provide tax or legal advice. This material is provided for information purpose only, and it should not be construed as investment advice or an offer or solicitation to buy or sell securities. So unlock wealth in 2024, how to underwrite multifamily real estate like a pro. And the keys for that, for underwriting like a pro, is really to develop a business plan that is backed by data research. I'm just shifting something around. And that's really the core of the presentation tonight. Go over what data source you should use and how to use the different sources of data points to do your underwriting. So for the agenda, we're going to go over the prerequisites, the major steps, and then the various assumptions or data source for each data point that we use. And anybody doing this should use, actually. And finally, we'll have some pro tips. So I forgot a little bit of, if you have any question, please either write them in the chat or hold them for until the end. We're trying to do the first part, like just about sharing the information we have so we can do the recording for our YouTube channel, and then we can go over the questions. Thank you. All right, so first part, the prerequisites. So in order to do the underwriting, you're going to need historical data on a property, the trailing 12 months of operations, a current rent roll, as well as, if available, a broker offering memorandum. Usually there's good information, especially if it's a reputable broker. Obviously, you're going to need an underwriting model. I'm using an off-the-shelf model, being that also I'm a mentor or part of a program. So if anybody was interested, let me know. I can probably get a little bit of a discount on if you're looking for a model. You will also need a market report pertaining to the particular property you're underwriting, and a team of third parties, real estate broker, property manager, a loan broker or direct lender, insurance broker, and finally, a real estate tax attorney, or worst case scenario, you would use the county or city assessor's office to get an understanding on taxes. So the major level steps: review historical financial statements, including the rent roll, look at comparable properties, rents. Then you'll move on to defining your pro forma for income and expenses, define your CapEx, which means renovation budget, define your debt or select your debt parameters, enter that in your model, define your exit plan, and finally split target returns, and the property purchase price. Just to give an idea, to do a full underwriting seriously, it takes usually a couple of hours, depending on how much data you have available. Sometimes you can have a model that's preloaded, but let's say, as a general rule of thumb, 2 hours is correct. And then as you go deeper in the analysis, it could take up to 20 hours on any given deal to make it, to be ready to send a letter of intent. So what are the data sources to use for the underwriting, the Proforma? So in the different columns of the different sources, the different lines represent the different
Oh my goodness.
the different as where the data, the different inputs will be used. I used the following notation, an X between parentheses. The data source credibility is going to be low. And I'll touch more on that as we look at the different lines and columns. Medium, it's a regular shaped X. And then if it's high credibility, it would be a bold X. So let's take an example. If you look at the income, the broker is going in their OM, they may tell you you can achieve this type of rent and possibly additional income. Obviously, they are biased because they want to sell a property, they want to make a commission. So you have to take that input as a grain of salt. I would say to some extent, similarly, if you look at the rent roll and the trailing 12 months, this is past information. It will be useful to some extent, but not necessarily as you build your pro forma going forward. The most credible information at any given time would be the actual rent comps, and we'll go over that. Always good to have the property manager to give their opinion on the income, as well as looking at market reports. And finally, any rules of thumb that you may have developed. And again, I'll go about the rules of thumb a little bit in detail towards the end of this presentation. Occupancy, same thing, broker, T12. The most relevant, always interesting to look at what happened, the historical and what the broker think about, but not a major, just data point as a reference. Here, the property manager, market report, definitely for me the most interesting source of information, and I will show specific examples of how we use the market report for that. Also, as usual, rules of thumb, they apply to everything. The variable expenses, and I will just focus on the key input here. So it's the property manager on variable expenses. The difference between variable expenses and, let's say, fixed expenses is that the variable you have control on, and the expenses that you don't have control on is usually taxes and insurance, which is the next line. So taxes and insurance, you're going to go to a tax attorney to have an idea of the impact of the purchase on taxes, as well as what to expect in the following years during your hold period. For insurance, you're going to ask a quote to an insurance broker, and that's the most credible data point. I would say you can always develop your own rule of thumb to do a quick assessment, but at the end of the day, you need to have confirmation by the third parties. That's the most credible data point that for those items, tax and insurance. Growth rate, and that's obviously growth rate for income and expenses, looking towards the future. On expenses, really, what you can use is the inflation. So we typically use 3% for expenses. For income, you can use the market report. Again, I'm going to show you where to look for that. Cap rate, you can get an opinion from the broker. Market report, definitely a good source. The ultimate, I would say, reference for cap rate is to get it from an appraiser who is going to be an expert obtaining pertinent data to define the cap rate. And I'm referring to the market cap rate particularly. So when they will do their appraisal, they're going to develop a cap rate number. The terms, obviously, you're going to go to a loan broker to get the appropriate numbers. Sometimes the real estate broker, they may have a division in their office that is doing lending as well. So in that case, that would be a pertinent data point. But otherwise, they could give an opinion, and they could have maybe like a term sheet, but it could be a dated term sheet and very generic, not specific to your particular situation. Always important to get a loan terms from a lender. Finally, on the list, the capex budget. The broker may have an opinion. I should have had something here. The property manager, sometimes they will give you an opinion. Ideally, you want to go through a third party. Is going to be your general contractor, for instance, especially if it's heavy renovations that you intend to do. So you have to go through. It's ideal to go through a general contractor. Otherwise, you can always ask direct contractors. Let's say there's only a roof repair to do something or something of that nature. So you could get a quote from them on that particular item. And as usual for everything, rules of thumb. So let's go a little bit more in depth on every source. And I don't intend to spend too much time, but just to give you an idea. So broker offering memorandum, again, if it's a reputable broker, I would certainly consider their information. Some brokers are not doing a great job, but national brokers, usually they give useful information. So usually you will find a Proforma. The Proforma will help you define your income, look at occupancy, look at variable expenses, the fixed expenses as well, tax, insurance, and also a growth rate. Again, I don't put a lot of emphasis on this. However, if it's there and if it's a reputable broker, I want to see, compare and contrast the different numbers that are available to me. Other information that are going to be available in the offering memorandum, rent and sales comps, use it as a reference. Maybe the cap rate, that's typically more of a verbal discussion. They will give their opinion on cap rates. Maybe debt terms, we discussed that, and maybe they have an idea of the capital expense budget for renovations. Sometimes they've defined a scope of work in the OM, so it's always interesting to get an idea, and maybe and most likely they run the numbers with a professional, a third party. So you can always ask them for an introduction if they know somebody who could perform the renovations at the price that they announce in the offering memorandum. And here I'm showing an example of sales comps. So here the idea when you look at sales comps is ideally you want to buy below the average of the market. If you buy below the average market price, so you're certainly at a good spot, and you're more likely to be able to have a successful business plan. Next, the historical statement. May put two examples. I know it's probably very small, but just for illustration purpose, I don't want necessarily to look at the details, but you're going to look at in the T12, you're going to look at income, the economic vacancy, historically on the property, the expenses, variable expenses, insurance and taxes, just to have some reference, some data point. In the rent roll, you're going to look at the current income as well as the current vacancy, and that's more important because day one, when you take over, that's where you'll be, right? It doesn't mean it's representative of your full first year of operations, but day one, that's where you're going to buy the property. That's the income you can generate in the rent roll, and that's the vacancy you will inherit at that stage. I would also add, on that note, if this example doesn't show that, but you have to ask delinquencies as well to see if anybody is not paying and understand if you're going to inherit tenants who are in the process of being evicted or not. Next, the rent comps. So for the rent comps here, there are various level. You can use at a very high level rentometer to get an idea, but I prefer apartments.com to have a better idea of where the rents are at, and you have access to pictures, you have access to the level of apartment features, and if there's a swimming pool and all the amenities and whatnot. So you can do a little bit of shopping online. And I know we went over that a few weeks ago, but you're going to dial down and select the properties that are the closest to the property you're looking at. But eventually you want to shop in person, DC fund properties. So here I use an example that actually I conducted myself and a colleague a few months ago in February. And eventually by going through, we had identified a number of properties that we felt were close enough, but we ended up removing several of them for various reasons. That's why it's important to do the in-person assessment. Next, the property manager. So here I'm showing like the dream situation that you have a very proactive property manager that's going to develop a budget for you and is going to give you a tons of notes associated to the budget, and you review with them to understand where they're coming from. So that's really like the ideal situation. You'll have as an input income, economic vacancy, as well as variable expenses. Probably the most important piece in your underwriting, because if you're going to work that with that particular property manager, that's basically the budget they're saying they can achieve. And then you can hold them accountable to achieving this particular on a given property. And that's going to be your one in that case. And then you can always like work with them on what does it mean to increase rents. So in this particular example, I think your one, we collected, there was a little bit of a loss to lease, but then there was a renovation premium of 81,000. And then it was probably over 5 units per month. So it's 96 units. So we're looking at doing the renovations over a year and a half. So there's a little bit of renovation premium that would be captured year two in that particular situation, just to give an example. But as I mentioned, that's the ideal situation. More often, the interactions with the property manager, they're going to be to give you less information, or maybe they will be okay to review what you put together and say it looks reasonable or not. They probably have a few rules of thumb that they can share with you. But all right, next. Now we start the market report. As you probably know by now, if you attended prior calls, we love using coast market reports. I think, in my opinion, that's the golden standard of commercial real estate and particularly multifamily. So in a CoStar report, I'm looking particularly at four areas or four topics in general. So number one is it's about the income. So regarding the income, I'm going to look at the demographic summary in the report, and particularly the 1 mile, maybe the 3 mile as well, median household income. Make sure that this median household income is 3 times greater than your target rent, right? You want to make sure that the people who live in this area, they can afford to rent a room at your target rent, or an apartment. So that's number one pertaining to income. Number two, again, I'm not putting a lot of weight on that particular piece, the rent comps, because quite frankly, it's a little hard to use. There are a bunch of numbers all over the place. I like to see something like this. Your target property, the kind of lower in the lower tier of the market. So there's a lot of room to increase rents. But beyond that, it's very, I wouldn't use the CoStar report for that particular reason for the rent comps. Next, occupancy. So that's where I think CoStar is remarkable because they publish historical that is pretty granular down to the neighborhood. So in this case, downtown Omaha. And they also break down between 3-star properties, which would be like a class B minus C, and 4-5 stars, which would be B and A class properties, so more recent particularly. And for the different type of properties, the neighborhood as a whole and the city as a whole, they are looking at a forecast or vacancy rate as well as historical. And ideally, you want to look at, don't make an assumption that you're going to achieve 4% occupancy when you see a forecast that's showing you between 6 and 8, right? In this particular case, for the 3-star, there's a bump here in 2024 that's probably tied to new deliveries of new construction apartments. So they are anticipating that there will be an impact at some point on the market, on vacancy in general. Growth rate. So growth rate also in the CoStar report, you look at the market rent year over year, which is the orange bars. And here, for instance, same thing, you look at the forecast. I'm looking so it's year over year, so they're showing a bar per quarter. So if you want to have an idea of what's the rent growth over 1 year, you just take the fourth bar. So, up to Q1 of 2025, it's about a 3% rent growth, annual rent growth. So same thing, Q1 of 2026, 3.5 or so, 2.8 maybe in 27, 28, it's about 2. So my recommendation, don't split hairs. It's a projection. I wouldn't necessarily use the exact number. You can take an average. Don't go above. Don't use 5%. I know it's at some point, some PM or owners, they were biased by the past and they say, yeah, I'm doing 5 years every year, 5% every year. There was a correction. In this case, it was still positive, but in some markets actually went negative for a period of time. I would say use probably in this particular case, I'd use maybe 2.5, 3% seems to be about the average. All right. Cap rate and sales comps. So cap rate, same thing. You have access to a forecast, you have an idea of what is expected to happen in the eyes of CoStar on future cap rate. Here also they go very granular. They break down by market, sub-market, and within the sub-market, the individual class of properties. What I like to use particular here is the current market cap rate, which is my entry point market cap rate as of today. Usually, when you underwrite, you want to take market cap rate and increase that cap rate of 10, 15 basis points per year. So to per year that you plan to hold the property for. So you anticipate an expansion of cap rate, meaning that the market goes against you. And I think it's sometimes historically it makes sense, right? So sometimes the market can go against you. In this particular case, I would not put a lot of cap rate increase for the exit because there is an expectation that interest rates are going to go lower. and therefore cap rates will go lower as well. Something I discuss in depth with my students when we underwrite. Sales comps, also I've mentioned, most likely the broker will provide you a set of sales comps. You want to cross-check the information with the CoStar report. And sometimes they could cherry pick some properties just to show what's better for them. But at the same time, CoStar, they may give you a plethora of properties. Make sure that you filter similar vintage, similar size, location, and so on. Obviously, here, if you look at the prices, they're ranging from 56,000 to 292. I don't think that they're all in the same basket, obviously. So you have to filter and use what's adequate. Third party team, mentioned it. So quickly talk to a tax attorney or county city assessor to have an idea of where your taxes are going to go after the sale and during the whole period. I would probably do both if you have talk to, and usually it's more like a county tax assessor, but talk to a tax attorney and the tax assessor to have an idea of your taxes in the future. Insurance broker, they will give you a quote. Always important to get a fresh quote. Rates are changing a lot all the time. You can never know exactly what to expect. Usually a good insurance broker, they can give you a ballpark rather quickly, and you can use what they provide to you, like, at least as a soft quote at that stage for you to start your underwriting. Usually turnaround can be 24 hours. I mentioned it earlier, cap rate, you want to get it from an appraiser. And from what I mean by that, or where to find an appraiser, when you're going to launch your lender third party appraisal or reports in general, but more particularly the appraisal report, that's where you can get the ideal and most accurate cap rate. Now, until you reach that stage that you're going to start the loan application process, what you can use is CoStar. And the very first number to use, again, like, you can ask the opinion of the broker. And if you have a connection with another broker, you can ask their opinion as well. Multiple sources as usual. Talk to a loan broker or direct lender to obtain debt terms. Talk to a GC or specialty contractors or your property manager for the capital expense budget, your renovation budget. My pro tips: develop your own rules of thumb in a market. And you're going to be able to do that just by underwriting several deals, going through the process, collecting the different data points, and build your own database. That's how the best rules of thumb that you're going to be able to develop. Because every situation going to be unique. It could be, don't use other people's rules of thumb too quickly. Develop your own. Ideally, you want to develop rules of thumb of your own property that you're managing in a particular market or asset managing. But otherwise, just underwriting, going through the process, asking the questions, and you're going to have your old rules of thumb. Maybe there will be a little bit of a nuance with the PM you use, the type of asset that you're looking for. It's very important to develop your own rules of thumb, and they will be unique for each market. As soon as you change a component, you change the PM, for instance, probably have to revisit the rules of thumb. You change property size, maybe vintage as well. You may want to tweak your rules of thumb similarly. Another thing I do sometimes is just consider a competitor underwriting on a similar deal. If you really have no reference point and you have a hard time to collect any data point. So that's always a good, either a competitor underwriting, that's the ideal. Sometimes I just look at an OM of a reputable broker on another deal just to see what kind of numbers they use. Is it in line with what I'm using? I could add that as well. OM offering memorandum of another deal or similar deal. To underwrite like a pro, you have to build your own opinion and build confidence on what can be achieved. It's very important because that's how you build your business plan. That's what you're going to explain to your investors. We're going to do XYZ. I received this different information from these different sources. And this is how we're going to run the improvements to achieve these different rents. Those are the expected expenses, expected insurance, taxes, etc., etc. So in order to do that, use multiple data points. Some have more validity than other, but I like to look at all of them anyway, because just to compare and contrast and understand if there's a big difference, and with multiple data points that are coming from multiple sources. All right. I hope that was interesting. I see some questions. All right, so that was just like a general comment from Paula there. Wow, all those in third party for cap rate. Yeah, I mentioned appraiser for the cap rate. Can I get the recording? It will post the recording on YouTube, Scott. Yeah, I see Paula answered. Thank you, Paula. Eviction rate. Eviction rate, yeah, that's something I guess maybe what you mean is that's hard. That's hard. I'm not sure there's an eviction rate necessarily in a market. And on a property, I think you need to take into account, obviously, if there is, when you take over, there's some evictions ongoing, you certainly have to take that into account. Just on a property I'm asset managing right now, Class C in Memphis, we had a month, 58 units. Over the past 4 or 5 months, we had like maybe 0 or 1 per month. And all suddenly now we have 4. So I don't know. We did the same filtering of the tenants and whatnot, but you certainly have to take into account a little bit of a reserve for bad debt. It's part of the underwriting process. Yeah, that's a good point. You can ask, like some contractors, they would offer to do some rehab without asking the tenant to move out. I've heard about this. I've never seen it. I've not experienced it. That's interesting concept. If I guess if you are very well organized people, it could be done. But I remember when I first came to the Atlanta region, we rented an apartment, and at some point they just installed like a smart home type of thing, like the lock and the switches and this and that. And just for that, they had a team of 4 people, and it took them like 3 hours. So major renovations, I don't know, it could be number of days, and I don't know if you can afford to disrupt tenants a number of days. So I don't know, maybe you have to pay them a hotel room or something. Anything is possible. CoStar has many possible reports. That's a good point. Usually I am asking the broker, or they give me the underwriting report, and they know what to send. Ethan, thank you for sharing. Is there any other question? I appreciate you all joining tonight. I hope it was interesting. Feel free to ask any question. Otherwise, we'll conclude the call. Turnover rate assumption. That's a good question, actually. Turnover rate assumption, I think there are 2 angles to this. One is looking at the historical rent rolls, or you can just look at the last rent rolls. You can see like how many new leases were started over the past year. So that will give you an idea of the past historical turnover. But you can ask the PM, the property manager you're going to hire, like what's their experience in terms of turnover in the market. So those are good. I like to use, yes, this depends on the market. I know in Memphis, I'm using like 50%. At the same time, you can work on, and that's really something like to work hard with the property manager to keep the tenants in place and build a community type of events, parties and whatnot. So people like really can connect with each other and like really feel at home. That's how you can keep tenants to stay there longer. Obviously, don't increase rents like 20% every year. That's the best way to have people leave, and take care of their maintenance requests quickly in a timely manner. Let's see, Ashley has a buyer need. Replacement property for 1031 exchange. Yeah, I don't have. And Ashley, can you elaborate on what? Maybe unmute yourself if you want. Just to, is it like single family, multifamily? Which market? What's? Go ahead.
Of course. I thank you so much. This has been such a wonderful meetup. So we are in the process of a 1031 exchange, and unfortunately our replacement property had caught fire. We are actively for a multi or even commercial building, something that's cash flowing or performing would be preferred, but we're definitely open to value add as well. And we're open to location.
What's your budget or target?
Our target would be 800, or max would be 800,000. So if we can stay under
800?
that,
Okay.
that would be wonderful. Mhm.
I know someone who has a deal actually in Omaha. That's what downtown Omaha. I used several examples. I think it's 26 units or something like that. Value add.
Okay. Yeah, I would
Um,
love to get that information.
yeah. I can introduce you. The young man who's running the show is actually one of my students, and we intend to have me on the deal as well. But I take your information, Ashley, and I will contact the young man. And I say young, he's not that young, but take your cell as well. All right. Good. Thank you for sharing that. Anything else from anyone?
Hi, Philip.
Hi,
I wanted to
Rita.
talk to you. I'm based in Dallas. Do you know anyone here from Dallas?
Let me think about it. I don't have any students in Dallas. I don't think so. I'm sure I know people. No, that's a good question. I don't know people who necessarily live there. I know people who live in Texas, but not particularly in Dallas.
Looking for in Dallas? We know a lot of people.
There you go.
Marita, what
Oh,
would you
is
want?
it?
This is Paula Savage.
I'm looking for multifamily, actually.
Multifamily units. You just need to marry
Multifamily
brokers.
deals.
Yeah, you'll get a lot of them. Yeah, you just want Dallas Fort Worth.
Dallas is a tough market.
Yeah.
Yeah.
Yeah. I would say contact brokers there.
Okay.
Yeah, that's a very competitive. Everybody wants to buy in Dallas, unless there are different ways to. But yeah, to be like direct. I know what we're doing very often. More recently, we are just joining forces with operators. And actually, we do have currently a raise going on right now in Dallas. Prominent spot. So that's one way to a particular market.
Philip, you want to stop the recording so that we can talk?
Yeah, we can end the call and then have a chat if you want, but just want to give an opportunity if there's any last question, and otherwise we'll call it a night. As usual, here's the link to our YouTube channel. I guess I could put this in the chat. Also, if you want to email me, either scan the QR code or I put my email in the chat. If you want to reach one of my partners, we will have our QR code and email. So again, thank you everyone for joining. And tonight, I hope it was useful. And we'll see you next week. Bye-bye.